So you want to work for a hedge fund or asset manager, and at the end of the road and at the top of the field is the highly coveted portfolio manager position. That's where the big bucks are, and that's the end goal. But what exactly does a portfolio manager do? This video is kindly being sponsored by the amazing team over at Analyst Prep. Hit the link in the video description below to get 20% off all their CFA and FRM resources. What is going on YouTube? Welcome back to the channel. In this video, I'm going to touch on the hours and work-life balance, the day-to-day responsibilities, the nature of the work, working with traders, working with researchers, investment analysts, economists, salespeople, so on and so forth, how to tell if you're the right person for the role, and everything else that you need to know about a portfolio manager and what they do, working for a hedge fund and working for an asset manager. Before we start, I've put timestamps in the video description below, so feel free to skip around as you wish. Smash the like button for the algorithm and subscribe if you're new around here. So an important distinction to mention is that a portfolio manager working at a hedge fund is primarily focused on beating the market by a lot and getting outsized returns relative to the market average or a given benchmark. A portfolio manager at a typical asset management firm typically aims to beat the benchmark, but to a lesser extent. Essentially, hedge funds will take much more risk to reach a higher level of portfolio return relative to traditional portfolio managers at asset management firms or fund managers. We know a portfolio manager manages portfolios, but what exactly is a portfolio? Well, a portfolio is a batch or a pool of investments or trades that are similar to each other or from a given asset class. So for example, you might have a portfolio that only has investments in technology companies. Another portfolio might have just currency trades inside of it. Another portfolio might just have real estate investments. You can also have client portfolios where the portfolio is being invested and managed according to the investment objectives of the client. Portfolios come in all shapes and sizes and can be very niche as well. For example, you can have a portfolio as small as a couple $100,000 or pounds, all the way up to a couple $100 million, if not billions of dollars and pounds. The number one role of a portfolio manager is to manage portfolios so that they achieve their return target. This is very important. Portfolio managers are kind of like the conductor of an orchestra. They're the lead, the head, the person responsible for the outcome of multiple individuals and teams feeding up to them. They develop and put in place investment strategies for investors or clients. And when we say clients, we can mean private clients like family offices or high net worth individuals, and we can mean institutional investors like large corporates, pension funds, insurance providers, so on and so forth. Another way to think about a portfolio manager is to think of them as risk managers. They're responsible for ensuring a portfolio reaches its return target without taking on too much risk or without taking on too little risk. Too much risk is bad because the last thing you want is a client who has lost more than they thought possible. And too little risk is bad because it means you're less likely to reach the return target given the precautionary investment approach that you're taking, since you're not taking much risk. If a portfolio manager realizes a portfolio isn't utilizing enough risk in one of its subsectors, she or he will go and have a word with the relevant investment analysts in that subsector and ensure that they ramp up or they increase the level of risk being taken within the portfolio. After all, clients are paying hefty management fees, and so they have a right to the asset manager adhering to the investment plan by taking the relevant amount of risk. How are portfolio managers split up? In the world of investing, you have different flavors to invest in. These are called asset classes, and I've touched on this in a previous video. Asset classes include fixed income, equities, alternatives, multi-asset, money markets, and so on. Within each asset class, you'll have lots of subsectors. So fixed income, for example, will have emerging market debt. It will have corporate debt. It will have securitized credit. You can Google these terms to find out a bit more about them. Lots of different subsectors within each asset class. For equities, you might have technology stocks, healthcare companies, consumer discretionary, so on and so forth. For each asset class and its respective subsectors, there'll be a portfolio manager responsible for managing that given portfolio within that firm. And so if you're keen on becoming a portfolio manager, a good first step is to identify which asset class you're most interested in and why. Getting this across in interviews will help you show clarity in your approach to an investing role and displays a long-term vision, which are both very important. Portfolio managers typically have at the bare minimum an undergraduate degree, and then sometimes they might have a master's degree or an MBA. Most portfolio managers have the CFA, the Chartered Financial Analyst qualification, and some do have the FRM, the Financial Risk Manager qualification too. This brings me on to today's video sponsor, Analyst Prep. If you're currently studying for the CFA or the FRM, or you hope to do so, you should definitely consider using Analyst Prep as a dedicated resource to help you pass either qualification. They've got a ton of resources, study notes, practice questions, mock exams, and video lessons. They cover every chapter of FRM level 1 and 2 with over 93 hours of videos, as well as tons of similar resources to help you with each level of the CFA. So this is the dashboard, and you can see how you're performing relative to other Analyst Prep users, and you can see your progress in each of the different topics. And then we've got the question bank. Here you can access questions specific to each topic, and there are lots and lots of different questions for each topic. And then we've got lots of different mock exams, which will always be useful for you. And then we've got a section dedicated to customizing your own quizzes. So if you feel like you want to create a quiz with X number of questions on a specific topic, Analyst Prep allow you to do that. And then we've got the chapter reading. So if you feel like you need to brush up on a few topics or chapters, those are all available in your account. And last but not least, they've got tons of high quality video lessons that will help you cement the key concepts and ideas in order to help you pass the exams. Analyst Prep have over 50,000 satisfied customers, and best of all, their products are cheaper than what you might get elsewhere in the marketplace for similar products. If you want 20% off all of their programs and resources, hit the link in the video description below and use the code Afzal20 at checkout. Now let's get back to the video. Now, a portfolio manager can't do all of the work on their own. You need individuals to idea generate, keep an eye on certain companies or sectors, carry out due diligence, manage client relationships, so on and so forth. As such, a portfolio manager needs to have strong relationships with traders, researchers, investment analysts, operational teams, and salespeople. In terms of client meetings, an equity manager will often meet with the chief execs, so the CEOs, the COOs of companies that they're considering investing in, or that they've already invested in. The purpose of these meetings will be either pitches or just introductory meetings or updates and for research purposes. In addition, salespeople might take a portfolio manager to a pitch to a prospect in order to promote the portfolio or the fund that the manager is responsible for. So if you're a portfolio manager, you can expect the bulk of your work to be done on the desk, looking at investment charts, Bloomberg, analysis, so on and so forth. But you can expect the occasional pitch, going to a client meeting and talking to clients face to face. Portfolio managers range in experience. For example, a junior portfolio manager might have 5 to 7 years of experience, whereas a more seasoned portfolio manager might have 10, 15, 20, 30 years worth of experience under their belt. In terms of race and gender diversity, there isn't much across the industry, surprise, surprise, as most PMs are white and male. However, having said this, there are a few non-white PMs as well as female portfolio managers across the industry, but yes, firms need to do a lot more in this space. The hours worked in a portfolio management role allow for a healthy work-life balance. Typically, a portfolio manager might get into the office at 8 AM and wrap up and finish their day by 5 or 6 PM. But don't forget, there's rarely a 9 to 5 in a front office role in the world of banking and finance. Also, it goes without saying, although you enjoy nice work-life balance as a portfolio manager, you'll have to put in the work, the long hours before you get there. So as an analyst, associate, director, so on and so forth, it all takes sacrifice to get to portfolio manager role. If you're interested in becoming a portfolio manager, the typical route is to start off in an investing or product management type of role and then progress within the given asset class's product. You'll need a strong knack for data interpretation, a thirst for knowledge specific to investing and financial markets, research and analysis skills, people management skills, the ability to keep a cool head when markets go against you, and the ability to work well as part of a broader team. Portfolio managers' base salaries at traditional asset management firms can range from 100 grand to 500k plus bonuses. Now, for a hedge fund, it's obviously going to be higher. However, these figures all depend on the company you work for, the size of the firm, the current market, the level of experience you have, your seniority, junior portfolio manager, senior portfolio manager, portfolio performance, how well has your portfolio done over the last year, and all these other factors. If you made it this far in the video, smash the like button for the algorithm and let me know if you're interested in the world of portfolio management or not. Let me know in the comments below what videos you want to see next, and check out some of these videos for more on portfolio management, hedge funds, and asset management. Peace.